Good morning, everybody. It's the 15th of March. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mates. All right.
Yeah, good. How are you?
Very well, thank you.
Good.
Tippity top.
All over your mechanical issues that we had yesterday morning?
Yes, I've got to go and pick the car up in a little while. Yeah, they've fixed the tyre. There's a big groove in the road outside where Tina reversed out onto the road and with a flat tyre.
You want to get onto the council about that, mate?
Yeah, I know. Well, I'll get on to Tina about that.
It's never Tina's fault, surely.
No, it wasn't. I'm only
Don't
joking,
out her
Tina.
on live TV.
Oh, are we live? Shit.
Yeah, she's just commented already.
We can edit that.
Yes. Good morning, everybody. We'll start again, shall we?
Yeah.
Right, let's get stuck in then. So, measured optimism over Ukraine peace hopes yesterday. There's been further Russian missile attacks on Ukraine cities, including the shelling of non-military targets. US military have also suggested that the Russian advances remain stalled in most areas due to heavy Ukrainian resistance. There was some optimism regarding peace talks that could make some headway, while a senior advisor to the president in Ukraine stated that the war could be over by early May, which is great, although markets are on the back foot again today, so I don't know if anything's changed. It's obviously a very fluid situation. In terms of what's going on with US bond yields, they continue to increase. There was further selling on treasuries yesterday, with markets fretting over the underlying inflation trends. Although energy prices retreated sharply, there were increased reservations over food price inflation. The 10-year yield is now at 2.14%. I mentioned this yesterday, Steve. At what point does the yield on the 10-year get to such an attractive point that people stop speculating on the stock market?
Well, this is the thing. 3%.
You reckon? I reckon that's probably not far away.
Yeah. I'm just sort of like thinking about
You guarantee yourself 3%.
Yeah.
Without any risk.
Bond. Yeah. I mean, you go for it, wouldn't you? Maybe,
Yeah,
maybe
probably.
not. Maybe not a Russian bond,
No,
but but yeah, I think people have sort of like come to terms over the last sort of 15 years of these sort of like really low returns that is readily available with a relatively low risk attached to it. People would jump at 3% because they're sort of like, even the man in the streets talking about, oh, I can get 0.5% with this ISA or whatever, and they're sort of thinking it's good. So 3% will go, ooh.
Yeah.
But yeah, so I don't know. I think sort of 3, maybe 3.5. Don't know.
Maybe markets are starting to price that in as well. The way we're seeing things trade. There's potential big top patterns on the US indices.
Yeah. But it's so volatile, isn't it, Joe? It's very difficult to sort of hang your hat on anything at the moment.
Yeah, absolutely. Okay, well, let's get on to some other headlines then before we get into the charts. Dollar yen retreated from a fresh 5-year high yesterday, and oil prices declined sharply yesterday, with WTI back below $100 per barrel. There was an element of optimism over peace talks in the Ukraine, which has helped drag that lower. And in the UK, the unemployment level has dipped below 4% to 3.9% in 3 months from January, which is obviously pretty good. Headline average earnings increased 4.8% in the year to January, with a 3.8% annual increase, still below inflation. So obviously need to bear that in mind. So Steve, let's get stuck into some charts, shall we? What's catching your eye this morning? What should we start with?
I'll start with oil. I think we mentioned this, or I mentioned this towards the end of last week or early this week. Basically, this bearish dark cloud cover candle, which is a negative candle, so that sort of gives us a little bit of a hint that things could get interesting this week on the downside of things. This has been sort of like, this has followed through obviously quite aggressively. We've moved on the WTI from 106.50 to down to 95, so a $10 drop. which is pretty significant. We look at maybe the daily chart where we've seen this impulsive move higher. Now, after an impulsive move, we do expect a corrective move in maybe 3 waves. So one wave down, wave up, then the second wave. So whether this is the first wave still remain to be seen. It's good to get a Fibonacci in there just to sort of see what sort of retracements we can look at. We're close to the 50% retracement level, which is not a significant one in my book. The most important ones are, let's get rid of that 50% so it doesn't distract me. 38.2, which we sort of seem to hit, and then we had the reaction higher. And 61.8 is obviously a very key level. And for me, that's the sort of level to really focus on, anywhere between $85 and $87 in WTI. I think that's where we'll find support. And that'll be in line with the 61.8. So a nice retracement there wouldn't be surprising at all, and would be just a normal market reaction, should we say. On the gold side of things, also pretty interesting. We talked about this shooting star candle where we stalled in front of the previous all-time high at 2070 and reacted aggressively lower and closed the week in the form of a shooting star. Now, we said that this has to be confirmed really to have a shooting star formation. It's a 3-candle formation, so you have the move up, the rejection, and then the move down, and this is playing out really nicely. So we've got resistance up at 1990 to 2000, very psychological level, and we had support that we pulled up on the chart on the well, bring the 4-hour chart up and that will sort of explain it a little bit more. We had the support down at 1963, which it sliced through. We also said that there was a head and shoulders formation, a neckline, which we retested and then came off further. And also we got the horizontal neckline, which myself and Joe would be more interested in. That came in at 1960 and we pushed below there. So for me, late last night was a great opportunity to sort of like go with the flow. Below there, stops came out, got down to 1925. Now the real next level of support for me is 1915, and below that we've got 1875, which would be a measured move of this head and shoulders formation. So definitely sort of like further downside potential in gold. Obviously it's still a live situation, Ukraine, Russia, that could sort of kick off at any point, so the volatility could still be elevated. The 4-hour candle that we've got at the moment, we've seen it down to 1925 up to 1937. It's a bullish hammer. So if we get a decent candle over the next 4 hours up to 1 o'clock, this is 9 o'clock to 1 o'clock, this is what this chart is showing, then there could be a sort of small stall in this sell-off and possibly a further retest of the high levels. So yeah, headlines to watch to sort of like really get a nudge on gold. On the crypto side of things, Bitcoin giving up the gains, obviously, we talked about last week. Again, you're sort of seeing these spikes going into this 45,500 level and being rejected quite quickly. And if we look at the last 5 weeks, we really haven't made any progress whatsoever. We can see the close on the week of the 14th of Feb at 38,340. The close on the next week was 37,800. Following week, we're hanging about. This is quite a pivotal level for us at the moment, but we're seeing lower highs. So this is looking a bit ominous for Bitcoin. Yeah, pressure's on, I think, and if we do get some more follow through on the downside on indices, I think that'll have the same sort of effect. You know, it's definitely not for me a safe haven, although a few people touting it to be. The FTSE side of things, we had a nice recovery last week and haven't really done a lot this week. Obviously, we've got the oil coming off, so that'll have a little bit of an impact to the negative side on FTSE, but it's holding up pretty well compared with others. The DAX has had a nice recovery as well. We were down at 12,400 at one point last week and trading now at 13,600, so 1,000 points higher. Sorry, 12,400, it's 1,200 points higher. So a nice little bit of a recovery, 10% recovery overall, although we're still down 2% on the day. So we've stalled around the 14,100 level, rejected and moved lower. And if we sort of like look across this, obviously the double top formation played out really nicely. We've extended much lower, but we're still only if we look at the sort of like move higher from the low of the pandemic when it first hit, we still have only just really, we're still above 38% retracement. So still plenty of opportunity on the downside for the DAX, but they do seem to sort of like bite back quite quickly. The Dow is still holding around this support level, 33,000, just trading below there now, so under a little bit of pressure. Really need to break below 32,260 to open up the downside. And again, 38% retracement is another, well, 3,000 points lower, about 10% lower. So you still got plenty of scope on the downside. NASDAQ was under pressure yesterday. That's trading at the 38% retracement level. So that's sort of like trading ahead of the game in terms of the Dow and the DAX. Further, so support here, really strong support here, we expect, coming in at 12,923. Below there, we've got 12,200 as the next level of support. On the daily chart, we had this head and shoulders formation, which we highlighted. It's a downward sloping one. It broke, it's retested the neckline on a couple of occasions, and it's continued lower. So we can see this rather nice support here that we're challenging at the moment, and below there. The measured move target for the head and shoulders formation is a move to 11,000. So that's pretty scary looking stuff on the Nasdaq side of things. Head and shoulders formation in the S&P has played out really nicely as well. Measured move target for that is only, is that seriously a 38% retracement is down there? Wow. So the S&P primed for a reversal as well. Yeah, that's about it on this side of things, Joe. I think sort of indices
looking very negative, right?
Yeah, under a bit of pressure, even with the
Blue
sort of
closing
like,
low potentially today if we stay around here.
yeah, that'd be pretty significant. So, and we said this last week. You tend to find that you have this these world events, this sort of like the Russia-Ukraine situation, and the markets seem to rally within it. But but then sort of like when things look like they could be some sort of like hopes of peace, that's when it sells off. So be very, very aware of that, and don't just think that when this situation is resolved that the markets will run through the meadow with like flowers and fluffy things all around them.
Yeah, it's weird. I mean, if you compare this to I mean, it's obviously not anywhere near that drastic yet, but the crash that we saw as a result of the pandemic, it all kind of happened at once. It was all just, just flushed everything out and then rebounded pretty much as quickly as it declined. But this time it feels a bit more structured, I
Yeah,
suppose. It feels a bit more like this, is a bit more serious and it's going to drag on for a bit, like bear markets generally do. They can last for a number of months, years in some
yeah,
instances.
yeah. I mean, this is just looking at China 50, which I highlighted. I've been sort of like talking about this level at 14,500. Talked about it for a long, long time. Said, look, once we break this, this is a serious break level. And look how it's just extended lower. It's like trading at 12,365. Support really from the pandemic lows. I mean, that's really sort of taking a kicking.
I mean, if it gets down
11,500.
there and takes that out, that's pretty
Yeah,
serious, right?
yeah, that's sort of like all hands to the pump. Yeah, but where are we going to get the support from next time? Don't know.
Well, I don't know. The central banks can't really do anything else, can they? They've got to try and tackle inflation. They're not going to chuck, free money or loose monetary policy plans in place because they can't, can they?
Yeah, that's it. Yeah,
There'd be
it's
some other sort of creative way of stimulating the economy, maybe.
yeah, UFO money or something like that.
Well, saying that you're stimulating the economy, the UK unemployment rate is like 3.9%, which is low, isn't it?
Mm,
So, if we're at full capacity, everyone's in work and everything's good, you don't need to do anything, do you? This is just a markets correcting themselves.
yeah, don't know. It feels like a weird world at the moment.
Indeed. Okay, let's have a look at FX then. So dollar index continues to be very resilient. We closed pretty much where we opened yesterday, recovering from the worst levels of the session. We are on the back foot today by 0.3%, but I wouldn't be surprised if we see the buyers step in again at some point. The euro is actually on the front foot today and outperforming all the other currencies as things stand. This is euro dollar, still very choppy down here, still clearly in a downtrend, so nothing to get excited about at the moment. No signs of any major reversals taking shape as things stand. Still expecting this 111.21 level to cap the upside. So more downside expected there, but as I said, it is bouncing today. If you take a look at euro sterling, that's doing quite nicely. So sterling still not doing too great. This is approaching a resistance now at 84.79. So that fib is now invalid because obviously it made a new low there. So let's just redraw that. Pretty much at that level now. So if we can overcome this kind of level here, then maybe that'll open up a further move to the upside here of this downtrend resistance line and these previous highs here. So very much on the front foot at the moment with euro versus sterling. Let's take a look at cable. That's slightly high today, but still looks pretty sick, really. Broken down through these key support levels here, still trading in a nasty downtrend. This 50% Fibonacci retracement level is the level we highlighted last week on the break of this level to target at 128.46, and we're getting edging closer to that as things stand. We talked about dollar yen that broke out obviously to multi-month highs, but still holding on to those gains. Just a bit of a retreat today, but nothing to be overly concerned about. Any pullback is likely to be supported at this 116.35 level and attract fresh buyers back into the market. The Aussie currencies are flattening off a bit today, but still looking like they may have reversed. This is Aussie US dollar, failed into downtrend resistance and this 78.6% fib, and backing that up with some big red candles. Very much negative price action seen yesterday. Potentially a break of a short-term channel as well there. Let's see if we can get that drawn on. See if my eyes are showing what I want them to show. Yeah, so nice little break of a wedge or a channel there, suggesting that we will see a continuation lower on that. That's pretty much it on the currencies that I wanted to go through. So we'll leave it there. So guns and head trade yesterday, Steve, you weren't around, so I
wanted to sell oil.
Of course you did, yeah.
Whoop.
I went short of Nasdaq yesterday and made 1.54R on that one, so that was a nice little return. Still fancying that actually. Still very much on the back foot today. Let's just have a look at that trade. There was the trade from yesterday. So it's getting closer to that target. That was a 38.2% fib level that I had on that. That was what you just highlighted a moment ago, wasn't it, on the daily? The 38.2.
Yeah.
Yeah. So just a few ticks away from that now. So what do you fancy today, Steve? Anything that's catching your eye?
One thing that's catching my eye is one of our guests has posted this. No, like my account went from 100 to 800 last week with you guys. Now,
he's blowing like steam out his nostrils. Though, does that mean he's unhappy, or
I don't know. I don't know. I'm just, I don't know. I don't know whether it's sort of like got the numbers around the wrong way or something, but the thing is, the thing that's sort of like, I mean, we sort of like risk 1% a day on our gun to head trade idea. So to sort of have that sort of 800% rise is a little, you're not really sort of like doing what we're sort of like doing. Or even if it's wrong and there's a loss and it's a reverse, you're not risking 1% a day, because in a week you would have lost 7% of your 800 or whatever. So anyway, just sort of he's still riding Nas. I think he's still Good. Short of Nasdaq. Well, nice one, great, and it's lovely to see, but you are over trading. So be very, very careful. I mean, I've done I sort of had a little bit of a similar episode. I didn't really talk about it, but I might as well bring it up now. Dollar Swiss, Joe. I think you were talking about it last week as sort of like as the potential upside in dollar Swiss, where we were saying dollar was like a bit of a safe haven asset. The Swiss was giving up some of the gains with the yen as well. There was one day, and you mentioned it, and I sort of like bought it, and I think I made about 10% on this small account I've got. So I was sort of like, can't really. I was over risking. I wasn't just risking 1%, obviously, and
So
that's a difficult thing
now
to
you're
do.
telling me you made 10%. Surely I'm in for some commission on that if you're.
Well, it depends. If you class it as you're advising me, then obviously we'll have the FCA all over you, son. So,
Nicely
so
done.
yeah, no. If you're not going to take commission, then we just say I was, thanks a lot, mate. It's
Yeah.
just like mates rates. Yeah, but anyway, so yeah, I like the fact that someone's sort of like really done well out that Nasdaq, because it's sitting there and it still feels fragile. So, but you know how these things work. It's as long as you sort of like you manage it well. Good luck with it.
Yep.
I'm sort of like, I still think there's a little bit more on the downside in oil. This could all blow up if the Russia-Ukraine sort of like, if the sort of talks they're having, the discussions they're having at the moment, just fall flat. This could like reverse quite aggressively. But if it's sort of like, if there is any breakthrough, positive breakthrough, then this is obviously has potential to sort of like wipe out at least another 10% on the downside. So I'm going to go with that. I'm going to get short here. Only on a daily trade. I've put my stop just above the hourly high of the 2 o'clock candle. Getting short at 95.98. The stop is at 97.98. I'm going for the 3-to-1 risk reward. 3-to-1. That's it. Looking at target, like a move down to the 38.2, just in front of there. Yeah, that'll do, Donkey. What are you going for, Joe?
Looking at currencies, really, I think I'm not sure how much downside extra there is in these indices based on the moves that we've seen. I'm looking at that S&P chart that you showed earlier. We were looking at potentially a new closing low. Just think that they tend to get bought up. We've seen that happen quite a lot. So a little bit skeptical about further selling imminently. So I'm going to take a look at sterling versus Swiss franc. This is the hourly chart. I've got some resistance that I had pre today on the blue line there at 22.50. And as you can see here, yesterday we saw a retest of this previous high here at 22.64. We've seen a decent close below the 10 hour exponential moving average. So I think we may be in for a further move lower here. So I'm going to sell that with a stop above the high, targeting a move down. Oh no.
Oh no.
Not even 2R. Going to have to
Oh,
tighten the stop
Joe.
up.
It's embarrassing.
Yeah, okay, let's go 30 tick stop. 22.43 is the stop. Ideally, you'd have it above these highs, but in order to maximize the risk reward, I've got to just assume that I'm right, and it's going to continue moving lower from here. So target is 121.10, looking for 3.45R on that one today.
Excellent. I love this comment as well, that this basically he's doing exactly what the whole show is about. It's basically we are giving our views, and you can take them views and sort of like utilize them around your own views and your own sort of like analysis, and it's great to see.
Absolutely.
So obviously we can get things wrong on some days and get things right on some days, but you just got to we look at the technical side of things more than anything else. We're bringing new sentiment into it, which is a bonus, I think, and we'll continue to do that over time. So yeah, great to see. Keep up the good work.
Absolutely, well done. Okay, data-wise today, 10 a.m. UK time, we have the German ZEW index, which is generally a bit of a market mover. At 12:30 UK time, we've got US producer prices, and also at 12:30 we've got the US New York Empire Manufacturing Index. Something I forgot to mention yesterday actually is that the clocks have changed in the US. So they typically, well, they always move their clocks 2 weeks before we do ours. So do be aware of that. They're opening earlier
Right.
from the UK side of things.
Yeah.
Cool. Right. let's wrap it up there, Steve. Have a great day, everybody, and we'll be back tomorrow.
Yeah, cheers, everyone.
Thanks. Bye-bye.